Hey everyone, Dan here. We are just after market close on Monday, July 19th. We're going to take our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you'd like to receive a once or twice per week email newsletter from me starting in August, put your email in the Google form, which is linked in the description below, to get on the list. I'll send you an email before I send out the first actual newsletter, just giving you a better understanding of what's going to be included in them, when they're going to start, and if you'd like to opt out at that point, you certainly will be able to. Alright, so SoFi had another down day today. What's new, right? It's been just nothing but a bloodfest since about this $23 mark. Not to mention the $24 mark and the attempt at $25 mark. But you see here we are looking more and more like we are in for 100% retracement from that pre-merger hype and squeeze pump up that we saw beginning in the middle of May, and then basically peak out on the merger date of 6/2, and then tried to come roaring back for the next week or so, and then has just slowly, or sometimes not so slowly, fallen off from that point on. Now, a couple of things to talk about. One, we'll go through the chart and sort of see what it is that we have in store, but I also want to mention, because some folks have been asking me if I have adjusted my price targets for 2022, 2025, and 2030, which you can go back and look at my SoFi price targets video that I put out recently. I have not adjusted those things at this point. Yes, I know, a year from now seems like a quick period of time, especially if I'm looking for SoFi to like triple in price. We really got to get going here, it feels like. But I kind of am more, that assessment is really founded on the idea that the things that they are promising to be doing in the near term, all the stuff that we went over in that video, which I'm not going to rehash right now, they're going to have to execute on those things in order for that price target to come into play. And this is sort of like me being a startup person, me being somebody who looks for teams that can execute on the vision that they have, and especially the bigger the vision, the more interesting to me. And this to me is a big one with an interesting team that could make it happen. Now, they're going to have to execute on those things in order for that price target to really come into play. But no, I have not changed my price target just because this continues to get beat down. That doesn't have me changing the price target at the moment. I don't even think that I would really, I guess I could go and adjust price targets. It feels really flimsy to do that, to be honest. What I would rather do is, instead of adjusting price targets, I would rather point out if they are failing to execute on some of the big vision things that they've put out there that, again, are in that video if you want to reference them. If they start to fail on those things and they're not really able to execute and roll out and create the vision of the company that they are set out to do and that they purport to be working toward, then, I will definitely be the first to jump out and say, hey, they're really kind of screwing the pooch on this one, and they aren't effectively making ground in these areas that are so key to seeing the company succeed and thrive, and the stock price therefore follow suit. So to me, that's what's more important to those longer term price targets. A year doesn't feel that long term, but there are a lot of things that can happen over the course of a year, which we saw in 2020, that's for sure, and that we're certainly seeing again in 2021. A year can change a lot of things. So, but to me, the point of having those longer term price targets is to not be so sort of thrust and tossed about, by the day to day and week to week ups and downs of the market, but rather to say, here's the direction of this company, here's where they're trying to go, here's how important or not important it feels, and so therefore here's how much upside or downside there could be. So that's what those things are based off of. So to me, it's more an execution game than a, because the stock price continues to go down, that it changes the game for me. All right. So Let's do a couple of things. First, let's take a look here at the daily chart just to kind of get our broader bearings. And actually, let's pull out to like a year and kind of, reset here. So there's a few things to kind of be aware of. One is, down here around the $12 range, there is a lot of support. Again, this is not me saying that we should or we could or that we will go down to $12, but this is just me saying right here, right around 1206, there's a very strong support zone. Now I'm going to work my way up because, well, you know what SoFi has been doing. I'm going to get rid of this fib for now because we know what's there, and these levels are going to line up pretty closely anyway. But I'm going to do the old school support and resistance zones, see where we should have really good support and resistance coming up in order to sort of plan trades accordingly, see where we might be able to claw back and get some price strength going, see where the important support zones are. I'm going to try to not stick a bunch of things super close in to each other and just have like price targets or zones that move just a fraction of a percent or something like that. So there's going to be some additional targets in here, like there's probably one right around here, but it's pretty close into that 17 mark, so I'm not going to worry about that one. I'm going to look more here, just above 20. So these are friction points that I would see it hitting, basically resistance zones to the upside. There's another 10% gain there where it's going to hit some friction, and then right around here. And then I think we should maybe have a glance at an extension before we do anything else, actually. So let me just put that there and then delete it. All right, so this is what I'm looking for to the downside. Something bouncing around 1465. We saw the 100% fib is 1414, I believe, which is this low down here. And, so that's kind of the range in there. Something in the mid to low 14s. But it should get some strong support here if it even needs it. Now, let me get rid of this red box, as that's a shorter time frame, so it's askew on this daily chart. And then, if it does fall below there, which, again, let's just be realistic. That could happen, okay? We don't want it to happen, but it could happen. To me, the next best level of support is 1206, because as you see, it's just no man's land here. There's just nothing that really happened. There's like this wick here. Maybe that would give you a little something because it lines up with the wick resistance there. 1311, we could put like a little dotted line there as a potential, like, putting it there basically just because it's like the alternative is having nothing, for a big drop period, like $2.50 of drop for a stock that starts falling in the mid 14s is pretty significant. So, it's just going to have to establish a floor at some point here or go to zero. But I don't think that anyone thinks this is an absolute worthless company. Or maybe you do. You can feel free to comment below and folks will bludgeon you in the comments. But no, if you really feel like it's a worthless company, you should say why in the comments and give folks some things to chew on. Dissenting, other opinions are very welcome here. Let me sidebar for a moment and talk about the comments. I have some stuff going on that I'll talk about in a future video. I don't think this is really the exact time or place to do it. It's slowing me down dramatically from responding in the comments. Just know that I have been looking. I do still appreciate the comments, even just the kind words like, hey, thanks for this, or hey, this is a cool vid. If you're asking questions, I do still intend to go back and respond to them. I'm sorry that I'm so far behind. I'll explain why in a few more days. And but just know that I have every intention in still getting back, and I'm sorry that it's been so slow. But I do still look at them, so I do still appreciate it. All right. So catch zones to the downside here, obviously the first best hope, 1465. Then, we do have pretty good run room. There is, sort of like dotted line territory. Now I feel like I'm doing the thing that I just said I wasn't going to do, which is putting in all these, but let me not actually put this here, but something around the mid 16s, will be a little bit of a dicey zone. And then but really I'd be looking for a run. Basically, it's going to look like it's running toward 18, and trying to make an attempt at 18. And probably it'll get stopped out a little before that, push back a little bit, but then be looking for it to go up and make a run at 20. And my suspicion would be that it would actually run up over 20, which maybe seems a little bit counterintuitive because that's such a psychological level, that $20 zone, to say, oh, this SoFi is back in the 20s. But I do think it would sort of run up just over 20 a little bit before it gets some strong pushback coming its way. And then obviously to the upside here for the the approach of the mid-20s. Now, we did have a red day today. This is not me trying to put salt in the wound, but see, the volume continues to dip down here, okay? And so we're slowing down volume since we had this huge influx of volume, presumably from the lockup shares and the additional interest from Wall Street Bets and the retail traders. And the good thing about declining volume, that is sell volume, is we'd be looking for that selling pressure to be dying down along with it. Just, okay, whoever wanted to get it out of their system, get their shares sold and move on. It seems as though they're slowing down and doing that less and less. And so that's good, because essentially another way to start to establish a floor isn't necessarily that a bunch of buying pressure comes in to offset selling pressure, but just that the selling pressure has run its course, right? And sometimes that's just what has to happen, and it can feel very, very painful, as I'm sure it has for everyone. But let's take a look at the other indicators of sort of momentum. So MACD, again, here we look, and just keep in mind this is on the daily, so this is going to move a little bit more slowly. We'll zoom in and take a look at the shorter term chart in a minute. But we do see the bearish momentum dying down. This is curling back. Now, it could, of course, do this curling back like it looked like it was going to die down here. This is probably a better example. It looked like it was going to die down here, but then it roared down further. Now, why I would think that that's less likely to happen in this situation is see how overextended the MACD was, up in the high ones and twos, very high up here at this point, had a lot of downward potential at that moment. Consolidated, tried another impulsive move up and got pushback very, very strong, and that's where we're working on this 100% retracement right now. So working off of 100% retracement and being as bearish to the downside as SoFi has ever been, okay, this MACD line sitting at minus 1.3 is the lowest that it has ever been. This one over here reached minus 1.05, all right? So you see that the MACD is starting to close the real estates between itself and the signal line. So it's curling toward it, hopefully preparing for a bullish crossover, which would then kill the rest of this bearish momentum and give us some either sideways movement, consolidating, building a floor, hopefully, or would give us a nice run up and push, potentially trying to make that run toward 18. But that's what I'm looking for on the MACD side of things. I think that's, it's signaling very, very nicely at the moment. It's not as quickly as you would like it to be happening, but it is signaling that it's wanting to commence a reversal. Now, on the RSI, what I'm going to be looking for in conjunction with the MACD, especially if we do get a bullish crossover, I'm going to look for the RSI and see what it does as it makes its midline approach. So as it approaches the midline, right where my cursor is right here, right about 50 on the RSI. Do you see, if you look back here, all of these approaches at 50 just got thwarted. It just got stuck and then pushed back and stuck and then pushed back. Okay, it was never able to push up over until here, and that's when it made its run up into overbought. And then it came back and it couldn't hold the midline to the downside, so it couldn't make another run up into overbought, and it got pushed down, sold off all the way down here. Now, I think that this is the best way, to be honest, to play the RSI. This is how I've come to use it. Is I'm looking what it does to the midline after it leaves an overbought or an oversold movement, or I guess area of the RSI. So that to me is going to be the next most important thing. Bullish crossover on the MACD, and then what happens as the RSI approaches the midline? Does it get stuck and get pushed back down? If so, then we don't have it yet. The bulls don't have it yet. My suspicion, because the MACD is so low and there's so much potential to the upside, is that that's where we could see it develop up over relatively quickly the midline and make that run into overbought. And then my bullish hope would be that it comes down to the midline, takes a little breath, and then goes overbought again. So that's what I'm going to be looking for from the RSI. Let's take a quick look at the MAs. Obviously, we don't have the 200 in here because we don't have 200 trading days, but we have the 50 and we have the 20. Now the 20 has crossed over. This is a bearish crossover. It's 20 crossing below, and that just happened a few days ago. Okay, that happened on the 14th. That said, it's going to give us an additional resistance zone when we come up to it, so just keep that in mind. Now, if you can flip it like you saw here, right, we have good historical precedence of the 20 flipping from resistance to support and then providing a really good boost to the upside. And the 50 is just kind of like scooting along through the center point here, not really playing a big factor. So I'm going to be looking closely at that 20. All right, so that's what I'm looking for in the near term. Now let's zoom into the 5-day, 5 minutes and sort of see if there's anything else that stands out in the short term. Then we'll do a quick look at the data and wrap this puppy up, another lengthy one, I know. Now, in the more near-term side of things, I'm going to put these as little boxes. So you see there is a bunch of price activity here that is going to have to be overcome if we're going to get true upward momentum going. I would extend this all the way up to about there. So we want to overcome this box. Obviously, we're sitting below it now, so the first thing is going to even get the momentum to approach the box. Now, the other potential here is that we had this stretch down to 1455. It hasn't retested this yet, so this could be a whole bunch of nothing, but we'll know more tomorrow. But what I'm going to be looking for, if there is any bullish sentiment movement tomorrow, I'm going to be looking for it to establish off of this trend line up, which would stick us approaching 16 by the end of the day. Now, this is a lot to ask of a stock that's been so beat down. It's been sort of the recipient of such bearish momentum and selling off, but at some point, if it's going to reverse, it's going to reverse. On the MACD side of things, for the shorter term, we do see a nice bullish crossover here, okay, coming from underneath, and we saw that obviously just in the pre-market today also, and gave us a nice run up there, but got stuck at that zone that we're looking at. And again, that ties back to all of this midday consolidation here, and more importantly, the supports in the previous trading days before that. All right, so that's what I'm going to be looking for as we get into it. But the MACD, I would more be looking for it on the daily chart, to be honest, the RSI and the MACD and how they're playing off of there, because this is more of a long-term downtrend that we're facing at this point, right? This is like really from this point on, it's been in suffering territory. I know that this felt like a good, potential clawback, but it just didn't really matter much of anything, to be honest. So that's what I see there. Now, all right, I'm going to save that for tomorrow's video or for a future video. Quick look over here. What I did want to look at, today SoFi was down. Just pull this over if it'll let me do it. It's down almost 1%, so minus 0.85. Now, I looked here, the ETFs holding SoFi. I saw this FPX. I'm not sure what this JKJ is. I couldn't readily find it, oddly enough. But anyway, FPX, if we pull that up, FPX actually slightly outperformed SoFi today. But the other thing to consider is SoFi down minus 0.85. The markets obviously suffered a lot today, even though they had this big push up at the end of the day. SoFi obviously listed on the NASDAQ, and NASDAQ was down over 1%. So in the vast scheme of things, a stock that has been so beat down like SoFi, with diminishing sell volume, okay, I think that that's a big part of the equation here, to be honest. We should be really paying attention to that in the coming days. Outperforming in a weird way, being less of an underperformer versus the NASDAQ on a very red day, could be additionally a really good sign. Now, let me just sort of tack on to that statement that yes, there is a strong element that I'm looking for the positive. Okay, don't take this to mean that there's wildly positive things happening at the moment with SoFi. I'm just sort of saying that the reality is Nasdaq down slightly more than SoFi. With a stock that's been so beat down, maybe we are starting to get to a floor, whereby the Nasdaq, which is seen by a lot of people as being overextended at this point, has much more pullback potential than SoFi, because SoFi has been beat down so much and has been sort of like recalibrated to a lower price point, and therefore it wouldn't continue to drop significantly. If the market drops further significantly, it would be a little bit more toward the zero range because of the kick in the pants that it's had the last several weeks. All right, there's a bunch more to come up this week. We'll go over some fib extension levels that I wanted to get to. We'll obviously look to see if some of these bounce zones hold, or if we seem to be headed toward this 13 or this 12 or what have you, or if we can sort of establish and make this run up toward 18. There's also some additional data that I'm going to be getting into on the insider side of things, as well as the dark pools that I want to look at as it pertains particularly to the fails to deliver that reached very, very exceptionally high levels at the end of June. Sort of figure out what could be going on there. But that will do it for this one. I hope your trading week is off to a good start. I appreciate you being with me here day in and day out. It means a lot. And I will see you in the next video.